Hi folks, so Brian McCarthy back with you again and just doing another one of my informative videos, trying to keep it up as we hopefully make our way out of lockdown. A lot of people have been on to me in different subjects and different stuff that I do, and we often cross over with different professionals and for different reasons. And one thing that's become very prevalent in the last 2 years for me especially is people from all over the country ringing me to figure out the kind of apartment market in Dublin for the sake of their pension. There's big tax relief for it. It can be done with a self-administered pension with the proper financial advice. I'm not a financial advisor, but I'm delighted to be joined by an old school friend of mine, John O Driscoll from Blueprint Financial down in Skibbereen, who's going to discuss the ins and outs of the self-administered pension and buying property with the same. How's it going, John?
Hey Brian, how are you, boy?
I'm very well, and yourself?
Good, boy. Good to talk to you.
You're all back in business down in Skibbereen, which is great.
Yeah, no, it's good now. Things are opening up, and hopefully the worst was over, and we can get back to some kind of level of normality anyway.
Absolutely. So, John, I suppose we'll tear into it. Just, I suppose I get this thing, and people call up and they're like, I have 250 to spend, or I have 300 to spend, and I'm looking for somewhere between a 7 and a 9% return if I can get it. Yeah. How does the self-administered pension to go about raising those kind of funds work?
Well, I suppose the big thing, and what we would always say to clients is, if you have the money in an existing pension. So, for example, if you've got a limited company or you've got a executive pension, you can actually transfer it into a self-administered pension if you want. So if you have 200 grand in a pension fund at the moment, and you mightn't be maybe happy with the fund performance, or you want maybe a bit of diversification, you can actually transfer that into a self-administered pension if you want to. As long as you've got enough inside in the fund that will justify buying a property, happy days. There's obviously costs involved with it, because it's self-administered pension, by the word is self-administered, so you need a pensioner trustee to basically work in conjunction with you. So there are fees involved with it. So, like, as a rule of thumb, you probably want between 150 to 200 grand minimum inside the pension fund buying a property first and foremost. That's assuming that you can get a property within that price range. But I mean, like, look, the process of doing it really, I suppose, is the first thing. And I suppose I must say from the outset, like, a bit of a disclaimer, obviously, is important in independent financial advice, because this is quite a complicated area and it isn't open to just everyone. But basically engage with a financial advisor. There's 3 or 4 different companies in the Irish market who are very well established in the self-administered space, and they act as pensioner trustees, and they basically have a panel of solicitors that you can use as well to buy the property. Needs to have a different deposit agent, so be it Bank of Ireland or AIB or Permanent TSB or whatever it might be. Rental monies are paid into that fund, and costs are paid to the broker or the pensioner trustee, or for upkeep of the property from the actual pension fund. It's obviously, I think property is a very popular, as you well know in your job, among Irish people, trying to get in the property ladder. It's seen as a good diversification, I suppose, if you have a property and a pension, but some people then want to actually buy property through their pension, which is obviously where the likes of yourself would come in, because you will be able to maybe highlight properties that will give a good yield, highlight properties in good areas. With self-administered pensions, really, Brian, they're like the world is your oyster. You can buy direct shares, you can do a loan note, you can buy property, you can trade currencies. So you're not really restrained in terms of a life assurance fund, which is what most people use.
It's essentially your own money, but you just can't put your hands in it. You can do everything else with it.
Yeah.
And John, can you?
I have clients.
Sorry, it's
I have clients there who've done property with it, who've bought shares with it, who've given loans to businesses. So it really is a kind of it's not a one size fits all. It's whatever kind of suits.
And I suppose people often split the risk in some high risk, high return, and low risk, low return.
Yeah.
Can you add money to
Yeah.
your pension, John, to get you to the level of buying a property?
You can make a contribution. So obviously, depending on what structure. So there's a self-administered pension, there's a self-administered PRSA, and there are self-administered personal retirement bonds. And for example, a self-administered personal retirement bond cannot be added to because that's a transfer from a previous scheme. But a self-administered PRSA or a self-administered pension, like you can make a contribution per year based on your salary, based on your age. So you can be topping up that fund if you want to.
Yeah.
Some companies, I believe, do allow borrowing depending on the loan to value, and that you can actually borrow against it. I personally have never had any experience of that. Any clients of mine who have done a self-administered pension have had enough monies inside in their fund that have been able to buy the property outright and have not needed to borrow.
Yeah, I've seen evidence of kind of loans maybe up to 40% at an absolute maximum, and probably even difficult to get at that level, but certainly finance is available for low LTV and maybe to get someone off the ground. The other, I suppose the reason it's appealing then, John, is the tax benefits, and essentially the purchaser, they have to be at arm's length from the transaction, hence where a property manager like myself comes in. It has to be managed by a licensed property manager, but 100% of the rent can go straight into the pension. Is that correct?
Correct.
Yeah.
Correct.
And
so it's obviously very attractive from that point of view, because say, for example, if you identify a client who has, an eye on a property and you reckon that you can get a very good rate of rent, I suppose, particularly in Dublin at the moment, because rents seem to be fairly buoyant up there. But you're right, the arm's length rule is really one of the most important things to remember. I'd say if I get at least one phone call a week from people interested in self-administered pensions, and then the first thing is, I want to live there, or my brother wants to live there, or I want to run a business out of there with my wife, whatever, you can't do it. Has to be fully arm's length. The monies then are paid into it, so it benefits from what's called gross roll-up. So if you do an investment pension fund with a life insurance company, the investment returns every year are growing inside the fund, tax-free. Similarly with self-administered pension, the income from the rent is going into your fund, and it's rolling up inside the fund tax-free.
And you're not taxed on it at drawdown when you do draw down your pension either?
At retirement, there's a number of different rules. So I suppose the first thing is you can take up to, depending, you can take up to 1.5 times your final salary tax-free, or a quarter of the overall fund tax-free, depending on what employment structure you have. 200 grand is the most you can take out of any pension arrangement in Ireland tax-free. And then over that, then there is going to be tax implications on it, depending on whether you go down the approved retirement fund route or go down the annuity route. But I suppose the important thing is that what we always try and get clients to obtain is you've got a €200,000 ceiling that you can access from pension fund tax-free. So if we can get our clients to that, that's the most important goal that we always try and achieve. And then after that, then it'll obviously depend on your income in retirement. If you've got other sources of income, other pension arrangements, other rental properties, everything will obviously go into the pot as a taxable income.
And what about the asset then, John? Is that taxable, and is that considered taxable in your retirement?
Well, you can sell it if you want to. There's no capital gains on it. Some people will actually keep it going, and they actually move the property into the approved retirement fund if they want to. Or some people dispose of it. It's completely up to them. It all depends, I suppose, on what your personal circumstances are at retirement. So that's why it's important, I suppose, to have a financial advisor that you liaise with fairly regularly to make sure that you're on track to to kind of achieve your goals and aspirations.
Yeah. John, that's great. I suppose we're only really scratching the surface on it, and that's all that I wanted to do this morning. A quick kind of 10-minute chat to give people an idea of what it entails. There's definitely advantages to it if there's residue in your pension to that kind of level. And just saying to people out there, if they want any further advice on it, John is available at Blueprint Financial in in Skibbereen. You'll get him online. I think he's got a new online portal coming out very soon. Is that almost ready to go, John?
Yeah, at the end of the month now we'll have a financialfitness.ie, so just being designed now at the moment. So it's kind of an online platform running as a kind of a complementary business to Blueprint Financial Planning. So any information that people want, they can email me at john@blueprintfp.ie if they want more information.
That's perfect. So you'll get John there and myself. And there is definitely post-COVID opportunities out there. And you know what I say to everyone's looking for 10%, and that might be a stretch, but 7 to 9% can certainly be attained. And I don't think anyone will turn their nose up at that for a decent investment. John, thanks a million for your time.
No problem, Brian. All the best with everything, and good luck with your ventures going forward.
Cheers, good man. You too.
Okay, bye. Take care. Bye-bye.